Hello and welcome to another update video about Bitcoin. We want to start here on the daily time frame and we take a look at the Bitcoin chart. The situation overall here on the daily hasn't changed at all. Yesterday, Trump's speech did lead to a little bit of volatility, but really zoomed out, yeah, not much happened. We just carry on with our routine. The levels haven't changed. The chart structure hasn't changed. Did we even have that? There were not even any adjustments necessary on the 1 hour, 30-minute time frame. So really that speech didn't do much. Got hyped everywhere on crypto Twitter with ridiculous calls for like 30% upside after the speech, which hopefully nobody from this community believed in, because nothing happened, right? And it's often the case when things are hyped. Well, good news is it was not a pump and dump. At least it doesn't look like it right now, which means the price kept quite stable. Was pretty unimpressed by the speech and whatever happened. So that's actually pretty good, because it means that, yeah, we're holding on that level, you know, despite the hype that was generated. And yeah, but let's start here on the daily time frame. Daily time frame is pretty clear for Bitcoin. Daily time frame suggests we are in this wave 5 to the upside, circle 5. And it also suggests that we should, it's difficult to say when it's happening, but maybe in the next few weeks, break out of this range to the upside with a break. Sustained break is needed here above 72,000. I am directly bullish as long as we're holding 56,560. No, not 560, 600. And you might remember from previous videos, until we saw a first 5-wave move up, the 50,600 level was key support. But because we've seen a first 5-wave rally from that low, we could add this additional support area. And I would prefer if this wave 2 would still happen. I'm talking about this wave 2 to the downside. This would be ideal. Let me take the micro count out. It might be confusing. It would be ideal to still see this wave 2. Why would it be ideal? Because we have a nice 5-wave move up. And I have to say, I mean, maybe, you know, we did get an extension in wave 1. That's fine. That's fine. But it is possible. It is entirely possible that wave 2 already bottomed. This would be an alternative. Preferred scenario, and that's not necessarily the one that's going to play out, right? I mean, I always say, you know, this is not really, you know, this is not, I'm not trying to call something here. I'm just trying to help you understand market structure so that you have an understanding of what to do if the market turns to the downside, and that you have an understanding of what to do if the market turns directly to the upside. What is to be expected? It's not about, you know, making a call here or something. It's about understanding where the risk management levels lie, and if we get a pullback, oh, do I need to panic, or is it simply a corrective pullback that could offer another opportunity to accumulate? So it's all about having a plan for whether the market goes down or whether the market goes up. Yeah, yesterday I did read a comment and someone said, TA is something like, you know, market could go up or down. Well, I mean, that is what markets do anyway. I mean, hopefully anybody understands that markets can go up or down. I mean, that's just what markets do, right? I mean, hopefully that is, I mean, that's like, I mean, hopefully that's the first thing someone should learn in the markets. That is really the first, you know, markets can do anything, yeah. But the TA is about understanding 2 to 3 probable pathways. So out of the infinity of what the market can do, really just the most probable pathways with, and that is really important, the risk management levels. It's really about the risk management and understanding the parameters that are expected. Okay, parameters means I wouldn't be surprised if the price dips into the yellow support region. It is part of what I show you here. Does it mean the price has to do it? No, but it would be ideal because we have a 5-wave move up. So ideally it's getting corrected. Now, this is what would be ideal. I've learned enough about the crypto sector not to tell you this will happen, because we are in a bullish market and we have a pretty good market structure here. Probably the best market structure since we've topped here in March. Okay, so pretty positive price action to the upside. Before that, it is possible that we are starting something like that from here. And, you know, we also here had a 5-wave move up. 1, 2, 3, 4, 5. So had I told you, here we need to get this corrected, people might have sold everything, it did move up quite a bit more. And all I just want to share with you, the trend is up. We have a support level underneath, or a support range, and this is supporting rising prices. But especially since the September lows of last year, pullbacks have been, or between September and March, pullbacks have been extremely shallow. So especially here, this was also an extremely shallow wave too. So in crypto, when the market is flipping into a bullish phase, moving into a bullish phase, I can't promise anything anyway, but I hope you know what I mean. I can't promise like deep pullbacks in a wave two. It just isn't what, we have to consider that pullbacks could be shallow. So we're dealing with a bullish or a directly bullish scenario, basically. And that just means that if there is a pullback, it can be an opportunity, but pullbacks can't be, you can't rely on deep pullbacks. Obviously, it's very early in that phase where that might happen, that pullbacks are very shallow. Okay, I'm just sensing this. I've seen some initial evidence for it, because these pullbacks here have been quite, normal. In this entire move up, they've been shallow. And if this is the next phase to the upside, this might happen again. So if I told you we have to get this wave two, without highlighting that we might have seen this wave two already and we might already break out directly, yeah, people might be disappointed. I mean, the way to go with this is anyway with a core position that you can hold, and then you just trade around it. And if it goes directly, fair enough, you still have your core position and you win anyway, right? So let's go to the smaller time frame chart. Here, situation hasn't really changed since yesterday. We still have our 5-wave move up from the 5th of July low. 1, 2, 3, 4, 5. I mean, that's my thesis here on the 30-minute chart. We have a 5-wave move up. We did get a pullback after the price formed the 5-wave move up. Showed you that yesterday, that we could count already 5 waves up. That always means that we have to at least be watching for a pullback. This here is the yellow support zone I just showed you on the daily chart. It's between 56,600 and 62,870. That means, in other words, if we get into this support region, it's likely the larger wave 2, which could be a setup for a larger wave 3. As I said, sometimes these pullbacks, everybody's waiting for the pullback, waiting for the pullback, waiting for the pullback. Sometimes they are very shallow, which is why I've marked it here as alternative wave 2 on the 25th of July. Low might already be in. And then this here would be a 1-2 setup. Okay, we could have topped already in the next move up, like wave 1 of the third wave. Okay, and then yeah, I mean, then the question is, okay, has the wave 2 bottomed? We can really, I mean, again, this would be then a smaller degree wave 2. I'd like to leave it open of where it's bottoming. The support region is relevant for that. At the moment, I haven't really seen a bullish breakout yet, but if we now see a break above $69,470, which is yesterday's high, this could indicate that a third of a third wave is unfolding. Yeah, this one here, which I will only be able to confirm really fully above 75,000, because until we break above 75,000, technically this could still be an extension in wave 1. Even though I will have to say, if we now break higher, it could more clearly be a third of a third wave. It depends a little bit on the market structure. Either way, there is an upper support area as long as it's holding 64,720 to 67,000. This is a directly bullish market, and we could break out directly. I can say this is not improbable. I can tell you that. It's not improbable, but I don't trust it because it relies on the very shallow wave 2 here and another very shallow wave 2 here. We'll see how today develops, but the way to go, I mean, if you're looking for ways to scale in, I can't legally make any recommendations, but one way of handling this, just one way of handling this, is to see all of this as a range. I mean, anybody who's already well positioned, there may not be any need to do anything, but if you want to accumulate, you could do it like this with a triangle, small bits and pieces up here. But the risk management level would be 56,612, because this seems to be the most stable element than this upper micro support area. Just in case we dip lower, it's not bearish, it just means we will likely test the yellow box. So yeah, just about accumulating but doing it carefully. So in case the price goes down to 59K, you're not panicking, you just continue to accumulate. But below 56,600, you would then obviously need to decide if you want to stop out or not. But again, it's just one. What I want to share with you, you can see all of this as a range. basically. Same thing I did say when we dipped down here. You can see everything until everything to the low here as a range. And we might not test the box. It might be an extremely shallow pullback. So, you might want to do this. But again, that comes down to personal strategy. This is just to help you understand the market structure. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.